Market crises is going to continue to occur unless we grasp that really what we need to do is change our definition of wealth. The question is wealth something that's unidimensional, or is it something that's multidimensional? And this fundamental issue is what's going to determine whether we emerge from an era of market crisis or not. Now, the reason why I say this is based on a study of market crises over the last 4 decades or so. So if I were to plot various market crises that have occurred since the early 1970s on one axis, and on the other axis, the ubiquitous pattern of sustainable progress that's summarized by a journey that a seed makes in becoming a flower, then what we have is the 3 stages, the physical, vital, and mental. And on the horizontal axis, starting with 1973, 1974, where we had a global bear market. And I choose this because prior to this, what happened was that we abandoned the gold standard, and the US as a currency no longer was a peg for other currencies, which meant that other currencies could float. And as a result of that, the money supply increased and inflation increased. So stability that we may have had for a few decades prior to that, and therefore something that was at the physical level, was suddenly not the case anymore, and we saw a lot of volatility in markets. So a rapid increase in experimentation, aggressiveness by different countries in terms of managing their currencies. And in 1987, we had a synchronized global crash. This was the first time that stock markets around the world lost a substantial percentage of their value in just a very short time, which meant that basically we had entered into an irrational phase, because if we think about different markets and different investment rhythms around the world, they should be quite different because conditions around the world are different. But the fact that everything began to synchronize means that we have now entered into a phase of irrationality, which is very typical of this vital stage where there is volatility and a lot of unnecessary aggressiveness on many fronts. This 1987 synchronized global crash securely defines or indicates that we are at this, in the middle of this vital level. And this, in 1990, we had the Japanese asset bubble, so we have all this money that then rushes into various Asian markets, to begin with the Japanese market, and the hyperinflation that began to take place around certain assets, illusory assets, became then collateral to begin a whole series of new unwarranted investments. And when the crash took place here, this money went into Southeast Asia. So through the 1990s, we experienced an Asian financial crisis that culminated in 1998 with the Russian financial crisis. And the Russian financial crisis occurred because Russia was a net exporter of commodities that was fueling the irrationality in Asia. So what we see here is this vital activity continuing in a very strong way, and then around 2000 we have something very different occurs. It's a dot-com crisis, which really, even though there was a lot of money poured into it and perhaps a lot of waste, but yet there was the residue which resulted in some tremendously positive movements, such as the establishing of plays like Amazon and eBay and Google and more recently Facebook and Twitter, which really is about the democratization of markets and giving power to the individual. So this is a very positive outcome and something that's much more at the mental level. And so we see this trend from something that had remained in a very tight circle, if you will, through increasing volatility and through redistribution of power away from monopolies to democracies. And if we think about the last decade or so, the starting with 2004, 2005, the US housing crisis that then led to the global bear market 2007 to 2009. In my perception, this is a fundamental struggle between this urge to move towards democratization and individualization of power versus maintaining the status quo in monopolistic structures with industries such as oil, retail, pharmaceuticals, and so on and so forth, trying to keep power the way that it's always been. And then 2010, we see the Greek debt crisis, which to me is a fundamental questioning of wealth. Is it what has been defined in this monopoly that's arisen and been reinforced through the decades, or is it something different whereby culture, spirituality, indigenous creativity has to be factored into how wealth is defined? And subsequently in 2011, we experienced the Occupy movement, which again is battling with the same question. So when we think about crises, we can see that this general trend is definitely leading toward this fundamental question of how we redefine wealth and whether our regulation and whether our policy can be broadened so that when we think about crises, it's not based on this narrow definition of whether a country or whether some banks are able to pay their debt, but on what really that country is capable of producing based on a broader spectrum of what exists within it.